Hi everyone, welcome to Tuesday. And like we do every Tuesday, we take a look at the performance for the main board for the New Zealand Stock Exchange, being the NZSX 50. Now, I just want to remind you, starting next Tuesday, being the 10th of February, I'm running a 3-week course. It's called Retire with Confidence. And over those 3 weeks, we are going to naturally look at money systems, making sure you've got yourself set up financially. We're going to look at the importance of KiwiSaver and New Zealand superannuation, and making sure that your money is going to be working for you and being in a position that you're able to enjoy your retirement well. We're also going to look at what you can do in retirement, because there are a lot of people that are really unsure and are really quite nervous about entering retirement and what they can do. We're going to take a look at alternative options that you can do in order to generate revenue, perhaps decumulation, anything like that. And we're also going to make sure that you are protected. And that's talking about things like wills, insurance, and bits and pieces as well. Link for that is below. I would love to see you there. Now, before I jump across and share my screen, just remember that this is for educational purposes only. No way is it intended to be personalised financial advice. I'm here to help you on your financial education journey. And remember, if you do have any questions or anything as well that you'd like to learn about the share market, reach out. Happy to help, happy to take a look at a share that you might be considering as well. Let's take a look at the New Zealand Stock Exchange. Right, so I have got the S&P NZSX 50 gross index up here on the screen. Now, let's have a look at last week, and you can see here on Friday, we've got another little doji happening. So the market didn't really go anywhere. If anything, it was slightly down. For the week, though, if I jump back just one candle, you can see there that we did end up closing up for the week, which was great because the following week was naturally down. You can see that we're almost in this sideways band when we look at this chart on a 5-year basis. You can see that we sort of had a high of around the week beginning the 15th of September last year. The market did go higher than that around October, but otherwise we've just really been sitting in this bit of a sideways band. And if I put my little cursor there for the 1st of September last year, really the market closed on there at around $117, and you can see that the market is trading between that and our high point here of about 122. Obviously, the more it touches on the upper end, the more likely it is to break through. However, conversely, the more it touches on that bottom end, the more likely it is that the market's going to fall. I'm not into speculating. I'm just looking at what the charts and things are telling me. Now, before I do jump across, I'm not sure if I've talked about this before. It is going back a little bit, but if I hold my cursor at around May last year, you can see we had a good up week. In fact, that was the 3rd strong up week in a row. Then we had a really healthy gap form, and then that was taking us to the week beginning the 12th of May. Now, when you see a gap like that happen on most share markets, more often than not, you will actually see a share market rally. And this is easy to say in hindsight. However, with my research and investing experience that I've done over the years, this is a very positive sign, especially for an index like this. So that is something that you do want to consider. The other thing as well is if I look at this candle here, which was sure it was the bottom of the market, and that happened around the beginning of July last year, you can see that that green candle was pretty much larger than that red candle before it. And in fact, if we go forward 2 weeks and look at that April one there, you can see that it's definitely engulfing that previous down week. So that's definitely a good, strong, bullish indicator. And it's what we call a bullish engulfing pattern. So I just really wanted to point that out. I'm not sure if I've spoken about that before, but let's go jump across to the 1-year chart and see what that's showing. So on the 1-year chart, it brings up the daily candles, and we've had, like a lot of indices and a lot of shares, 3 down days in a row. And if I glance down here at the volume, quite strong volume as well, especially on some of these selling days, which is not really a good sign. What we want to see is the volume contracting if the shares are selling off and going down a little bit. That can be a very strong indicator, and especially as if we get a good strong volume on a positive day, that's a good bullish indicator as well. So at the moment, it's just probably a little bit neutral for me as to what is going to happen there. But we'll go back to the 5-year chart and we'll put our moving averages on. So as normal, I always use the 30 exponential, and I also like to overlay that with the 15 period exponential. And you can see here that the market has almost started to go below. 2 weeks ago, we saw the market close below that 15-week moving average, and then last week it did trade above it, and then naturally Friday we had that down day, which is something to be quite cautionary about. Let's jump across to the 1-year chart and see what that's telling us. Now, this paints a little bit of a different picture. You can see that that 15-day moving average crossed through the 30, and that was on the 16th of January, and it's still trading below it. It is starting to trend up a little bit if you look at that. However, for me, I would definitely want to be seeing that 15-day moving average having crossed through the 30 before I would look at any more new positions to open. Now, that's not to say that I've sold my positions. I certainly haven't done that, because you will always find exceptions to the rule where shares are outperforming their indices. But it just means that, in my opinion, you need to keep an eye on what's happening with the overall market. And if you're holding a good share, definitely keep riding it. Keep using those stop losses, but just be aware if you are looking at entering into any new positions, because that is what this could be telling us, that this could be something about to happen. And if I glance down the bottom here, I've got the RSI, which is the relative strength indicator. And you've got 80 as an overbought situation and 20 as an oversold. Yes, it's sitting at around that 51 level. Now, the thing to look at is it appears on a daily basis that this is pointing down. That is something to also be aware of. If this is pointing up, great, good indication that the market is going to continue, that there is potentially more buyers out there. Because it suddenly looks like it's sort of crested and looks to me like it's facing down, that is also another cautionary sign that we need to be aware of. So not a lot really to report there in the New Zealand market, but just keep an eye on it. I hope this is helping you to be able to read some of the charts and what I look for when I'm evaluating a share. Now, on Thursday, we are going to take a look at 3 different ETFs that are listed in states. So one's the Vanguard S&P 500. We're also going to look at the momentum indicator, the SPMO, which again is the S&P 500, but it's the top momentum stocks. And we're also going to look at the NASDAQ, the QQM. So if you want to see that, come back on Thursday. But remember, if there's anything that you would like to learn or a share that you'd like me to review and do a video for you, I'm more than happy to do so. And hopefully I will see you on the 10th as well for our Retire with Confidence course. Heaps happening. So keep in touch, keep reaching out. Thanks.